Indonesia's sovereign wealth fund says it will honor existing contracts as it tries to ease anxieties over plans to tighten control over key commodities, but that it will review them to ensure prices are not below market levels. Prabowo Subianto yesterday laying out how he intends to extend state control over resources, given long-standing concerns over revenue lost from under-invoicing and tax evasion. But investors are concerned about uncertain policy directions and how new pricing mechanisms could hurt their margins. More, we're joined by Jameel Ahmad. He's chief analyst at GTC in Dubai. Mr. Jameel, if Prabowo Subianto wants to ensure that the Indonesian government gets the revenue that is fairly owed to the government, and he's hoping to do this by extending control on the sale and pricing of Indonesia's resources. Is this the best way of going about it?
We have to take into account here the more strategic backdrop that Indonesia is seen as a global heavyweight in commodities. But from the perspective of this news from the eyes of the authorities, it's seen as an export market. And what they're trying to do is obtain more control over the supply chain and essentially extract more revenues from exporting such commodities. And this actually fits in with a broader macro backdrop of what we are seeing on a global level, where we are seeing certain governments and certain initiatives to take more control of national resources to try and get more value from those commodities or those export materials. And I think there is also an indirect link here to what's happening on a global level, geopolitically, what's happening in the Strait of Hormuz. And I'm sitting in a market where, which was a couple of weeks ago, there was historic news that the United Arab Emirates will leave an OPEC. It's not apple for apple. However, that news was to try and gain more value from exporting oil. And this news is about trying to gain more value for Indonesia's standpoint from exporting commodities rather than just being seen as an exporter of these specific commodities.
Well, short term, we might see some pain in the market. So certainly yesterday, Indonesian stocks in palm oil and coal tumbling there. So short-term pain, but possibly, as you suggest, longer term, this might be a good thing.
Longer term, it comes down to whether Indonesia is, again, able to extract as much value from this commodity and improve its government revenues. But over the short term, investors on a global level, and again, this wouldn't be idiosyncratic or isolated to Indonesia specifically, they do not like state intervention risk, they do not like uncertainty, and they do not like unpredictable news. And we see this with risk aversion from different case studies as well. So essentially, this news was not priced in, it was not expected, and that's why markets in terms of Indonesia's stock market and some aspects of fixed income will fall from a loss of sentiment. Whether that loss of sentiment continues depends on whether these policies are successful, and also depends on whether this is seen as more of an intervention from other aspects of the economy, whether this news and this development could spring onto different assets. And that's where you might see more of an investor reaction over the longer term. Otherwise, this is seen as more of a short-term noise, but it's not going to necessarily impact the trends for the Indonesian market.
All right, a final question here, Mr. Jameel. Concerns as well about the Indonesian rupiah. So related moves to what's happening with these resources, also a move to ensure that any foreign exchange is kept 100% in a state-owned bank. So that's Indonesia making sure that its foreign exchange reserves are sufficient to strengthen the rupiah. Where are we on the currency?
Well, you also have to take into account here what's happened in the Bank of Indonesia, who are turning more hawkish and optimistic towards higher interest rate policy. That can prevent additional losses for the currency. But again, emerging market currencies are not necessarily directly impacted by what's happening in the domestic economy. We have to look at what's happening on a global level. And right now, I would point the finger strictly on the geopolitical picture, which has resulted in strength in the US dollar, for one, because it's seen as a safe haven currency. Secondly, and this impacts emerging market currencies in a more sensitive light, the US Federal Reserve interest rate policy, where the US central bank are no longer looking to cut interest rates. that impacts flows towards emerging markets. But the light at the end of the tunnel here is whether we have optimism that the situation geopolitically with US and Iran, if we do see a peace deal or complete easing of tensions, we will then start seeing some potential weakness in US dollar because we won't need that safe haven asset so much. And we will start to see, I would say, a resumption of noise around the US central bank looking to cut interest rates this year, which was the beat of the drum up until this unfortunate geopolitical episode. And I would watch this space because the Indonesian rupiah has been specifically sensitive towards these external forces as well.
Thanks for that bigger picture there, Mr. Jameel Ahmad, Chief Analyst at GTC, speaking to us there from Dubai.